Monday, May 4th, 2020, MONERO 64, home of alternative economics and contrarian views. Today I want to look at why holding excess cash in the bank or even at home is the most dangerous thing people can do in the long term. Maybe not even in the long term now, medium term. Short term, of course, is a different story. Of course, I'm not saying people shouldn't have any cash. You still need cash to live day to day, to pay your bills. But I've been looking at the national debts, especially of the United States, but also of the UK, where I am. And we know that in the fiat currency system, the national debt is what backs the currency. And we're seeing an explosion in the national debt in these last few months. We had already seen a more gradual explosion of the national debt since the '08 crisis, of course, and now it's accelerating. I'm going to look at some of the numbers, some of the forecasts, some of the historical precedents, especially in the UK. Before I do that, let's quickly look at where the markets are this morning. It's 7:40 a.m. We've got spot gold up about $5, so we're at 1705. The high's been 1706.50. The low's been 1691. So gold is continuing to move higher here after being very volatile last week. Silver is trading at $15, up 4 cents. High's been 1511, low 1468. The Dow future is down 150 or 2/3% at 23,583. S&P 500 futures down 16 points at 2817, and the Nasdaq 100 future is down 35 or 0.4%. Sterling is down 1/3% at 124.46. The euro is down 1/3 as well at 109.43, and the dollar is down slightly against the yen at 106.77. Strange how with the dollar being firmer versus the pound and the euro, gold is up. That relationship is not that clear cut. I don't think. You look at where the dollar was. It bottomed in March of '08 at around 70 in the dollar index. Gold at the time was about 1,030. And here we are now, the dollar index a lot higher. And so is gold a lot higher. But so gold has outperformed the dollar. This thing about the dollar milkshake theory, I think, is a big distraction. If you keep focusing too much on the dollar being strong, you're doing the wrong thing, because the dollar isn't strong against gold, which is the real money. Anyway, let's keep going here. Just finish off. We've got crude oil down 3.6%, just above $20. That's the WTI crude. Bond market, we've got the 10-year yield down about 2.5 basis points, just above 61 basis points. So those are the markets. It's going to be an interesting week. We're going to have non-farm payroll on Friday. I think they expect the unemployment rate at 16%. It could be even higher. We'll have to wait and see, of course. Now to the question of why you shouldn't hold cash. It's the most dangerous thing to do. And it might sound really strange not to hold cash, that it's not safe. But having lived in countries like Brazil, where I grew up, and looking at other countries like Venezuela and Zimbabwe, holding cash has been, the local cash, of course, has been a horrible strategy over the last 50 years. And I think it's going to start being even worse in the developed countries, especially in the US and the UK, but also in the Eurozone. So I wanted to start out first with the question of debt. And I'm going to use historically some of the UK data that I have. And presently I'm going to use UK and US. But if you look here, the period between 1800 and 1910, the national debt of the UK, of course, spiked here during the Napoleonic Wars. But then after the war, as they used to do before, the debt was kind of paid off. Of course, it didn't get to where it was before the Napoleonic Wars, but they try to pay it off, as you can see here. It says here that it says percentage of GDP, but if you look at the left-hand scale in the chart, it is in billions. So you can see here it got up to 850 million pounds almost at the top there after the Napoleonic Wars, and then it went back down to below 600 million, and I think it was around 650 million just as World War One kicked off. And why am I showing this chart from back then? Well, because if you then look at the Bank of England inflation calculator, you can see that from 1821, when they reinstated the gold standard in the UK, until 1914, when they suspended it, 10 pounds worth of goods in 1821, you only needed 9 pounds 51 in 1914. So that meant that you had an inflation rate of minus 0.1 over that time. So it just goes to show you how debt is important to the inflation. Or in this case, these are prices. This is like the CPI, because we all know that inflation is the increase in the money supply resulting in rising prices. I know the Bank of England call it inflation calculator, but that's part of their program of making people confused. It's the cognitive dissonance. So be as it may, you can see that that went down, prices were stable. Now I want to look at a chart, the same chart, but from the early 1800s to now. And I even did it a logarithmic chart. A linear chart would have looked too silly, too exaggerated, but even this chart looks exaggerated. You can see the period in the 19th century that was going down. It was under control. There was no inflation. But look at the 20th and 21st century. It's been uncontrolled debt creation. And why? Well, because we don't have an anchor to limit and control the bankers and governments. They can create this debt and pass it on to the public out of thin air. And this is going to get even worse now. This hasn't updated, of course, for what we're seeing now. But is it surprising, if you look again at the Bank of England calculator, that we have rising prices, or as the Bank of England calls it, inflation? It's not, because we've had an inflation in the money supply. So you look here from 1914 till today, you need 1,162 pounds and 55 pence to buy what cost 10 pounds back in 1914. So the average inflation, as the Bank of England says there, was 4.6% a year. And I also looked at the period from 1971 till now. And why 1971? Well, that's when the world went totally off some semblance of sound money. And why some semblance? Well, because it wasn't a true gold standard, the Bretton Woods system. It was a gold exchange system that was abused by one country. We know what country that is, the United States, of course, for some of you who don't know. But you can see that the inflation rate, again, I put it in quotes because it's not really inflation, it's the price level, increased by almost 6%, has been increasing by almost 6%. So those people who say that inflation is not a problem, that we have a problem of deflation, they're totally deluded. And it's not going to get any better. And why do I think it's not going to get any better? Well, you just have to look at the debt clocks. First of all, I look at the U.S. debt clock. You can see we are approaching 25 trillion, the national debt. The debt to GDP was earlier this year, before all this kicked off, around 106%. Now it's 117% almost. And the most scary thing, I thought the scariest thing was looking at the 2024 forecast for this debt to GDP. It is, of course, it's at 42 trillion. And this is at current rates. I know the rate of debt increase could decrease slightly, but I would say that you need to look at GDP as well. That's the other part of this equation of the debt to GDP ratio. And I think GDP is going to be a lot lower. But be as it may, as you can see here, 42.2 trillion and 233% of GDP. So it's getting out of hand. This is on the website that I looked at, the usdebtclock.org website. But if you have an iPhone, I'm not sure if this app works on the other Android systems. But I looked at the app, usdebtclock.org app, and you can actually also go to 2028. This is the scariest part, even more scary than 2024. I did a screenshot, as you can see here. 72.5 trillion almost they expect the national debt in 2028. Percentage of GDP for 2028, 475%. That's a crazy number. What do I think will happen? Will we get this scenario? Well, I don't think the system can survive at those rates. So before we get there, I think it's all going to implode. I think the paper money is going to collapse. And that's why you need to have precious metals, gold and silver. For the UK, it's a similar story, even though we don't have a forecast. But if you look here, the national debt has already gone above 100% of GDP. And I think this is even underestimated because they don't include a lot of the loans and guarantees they gave to the banks back in '08. That's off the balance sheet. So I would say that number is even larger. And to finish off, just wanted to go over a story I saw this weekend in the Sunday Telegraph to do with the UK finances, which shows that things are getting even crazier in terms of the debt. They're going to be creating a lot more of it. And it says here, Treasury's chief borrower rejects fears over global demand for debt. So this is a guy who manages, he's the head of the UK's Debt Management Office, or DMO. Here's the story, and I'm going to read over it. Not the whole thing, but just to show you how crazy things are. And it says, the man charged with raising the cash to prop up Britain's economy has insisted he would not be seriously worried if markets failed to immediately buy up, and wait for it, 180 billion pounds in gilts to be auctioned over just 3 months. That's crazy. 3 months. So what does that mean in terms of the UK economy? Well, 180 billion pounds is about 7% or a little more of the UK economy, and that's in 3 months. So if you annualize that, that's almost 30% that they're looking to borrow from the markets in the next year. And that's crazy. That debt is going to go ballistic. It's going to go crazy. We're going to see debt to GDP, well, probably a very near 150% very soon in the UK. And I read the article further, and he actually said, well, this is not debt monetization. Well, the guy's name, by the way, is Sir. He's a Sir, Robert Steeman. And they were talking about whether this is like debt monetization, because that's dangerous. And he said, oh, no, it's not, because we do this in the primary market. We issue it to the market. And the Bank of England doesn't buy it directly from us. But the Bank of England is doing the QE, right? So The market is buying this because the Bank of England is holding their hands. The Bank of England has their back, right? So this is just a sham. It's just a cover up, a deception. The Bank of England is monetizing this debt ultimately. And we know what happens when central banks monetize the debt in such a blatant, but also in such a big way. You get the destruction of the debt. Investors lose confidence in the currency, of course. And here's proof that the debt is the currency. They even say in the article, the men charged with raising the cash, right? So how do they raise cash? By issuing debt. So that's why you need to be out of cash. It's paramount, especially if you've been working most of your life or all your, and you're like near retirement and you have too much cash in the bank. That's a danger, in my opinion. I'm not telling you to do it, but I personally wouldn't do it. I only have enough cash in there to pay my monthly bills. Yeah, gold and silver are the best form of protection, monetary protection. You could do other things with your cash, buy other goods that are tangible, real things that are durable, that that is more to your liking. But monetary wise, I would say it's precious metals. And how can you do that? Well, Google bullion dealers. There are many bullion dealers in the UK. And I'm not going to tell you where to go, but people ask me, where can I go? And I have a promo code with Gold Investments, MONERO 64. You get a small discount by going to goldinvestments.co.uk, or you could choose to have your gold held for you physically in Switzerland and be able to spend the gold as well. And you can do that through GlintPay, through the Glint app. And I have a promo code there as well. If you open an account and use it, it's Mario Glint 79. So there you go. Cash will become trash. Well, it has been trash already for over 100 years, and it's going to get even worse. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. You can also follow me on all these other platforms here below. So I wish you all a great start of the week. Take care. Bye.